here today with Scott Williamson, Managing Director of Blackstone Minerals. Scott, thanks for your time.
No worries, thanks.
Able to share a little bit about your current asset portfolio?
Yeah, so our main asset is the BC Cobalt project, and we're in British Columbia looking for cobalt. We're about to hit the summer season, so we'll send the geos out and look for some more cobalt. We had a great year last year. We're defining targets. We've got the dual target, which looks really good. We've got some good IP anomalies below the surface, and at surface very good copper, gold and cobalt in soil. So some great targets to get onto this year in Canada, and particularly moving that along as the cobalt price sort of struggles a little bit. But we think that asset's got some long-term strategic value.
In terms of the asset portfolio, it's fair to say you've just changed the game?
Yeah, changed the game a little bit. We're still sticking with battery metals, and what we've seen with the battery metals producers and end users is that they're also needing nickel and nickel sulfide. So we've now acquired an option for the Tarkwa project in Vietnam, which is a nickel sulfide mine back in 2013 through till 2016. It's now in care and maintenance, and we're looking to explore that. And previous owners made a significant amount of money, over $200 million, put over $100 million US into capital into building the asset, and they didn't do much exploration. So we think that with our exploration team we can revive this asset and potentially restart it and produce some nickel, which would be great for battery end users.
And what about the facilities and infrastructure at the project? What state are they in, given mining ceased a few years ago?
Yeah, it's a great little mine. The vendor is actually a metallurgist, so the processing plant is like his little Meccano set, and he's kept it in great condition. So there's a 450,000 tonne per annum concentrator, and that's in good working condition, so you can turn that on tomorrow. There's an underground mine. It's built to Australian standards, so it's run by Australians. It's a modern mechanised underground mine, so they've built with jumbos and big trucks, so you can pull big tonnes out of this underground mine. And they didn't really look at the disseminated sulfides, which are actually nearby that mine. So we'll very quickly look at this disseminated system and see if there's potential to start mining fairly soon.
So is it a build up resources through exploration, not just a turn the mine on as quick as possible strategy?
Yeah, we'll try not to turn it on too quickly because we need to do some studies and a lot of exploration work. So there's a lot of targets, over 25 massive sulfide vein targets, but also we will understand this disseminated system as well. So yeah, a lot of exploration work to be done because previous owners really neglected the exploration, and we don't really want to start something without understanding what the full potential is. So yeah, probably a couple of years at least of exploration first.
Are you able to talk through some of the transaction metrics and how it de-risks it for Blackstone?
Yeah, that's a good point. So it's an option deal. So over the next 12 to 24 months, we're paying $400,000 per annum as an option, US dollar. So that keeps the asset in good standing. So that is while we're exploring. So our exploration costs are on top of that. And as over time, as we're happy with this asset, then we'll offer the vendor $1 million of Blackstone shares. So it's a fairly, I think, a good way to really understand and explore the asset, and over time we'll execute on the deal. But yeah, so we're raising $2 million to get us through the next 12 months, and that keeps us, the rig spinning and exploring and understanding the asset.
And what about the costs and the regulatory environment of Vietnam?
Yeah, it's a very low operating cost environment. There is a tariff on concentrate for nickel. We believe we can reduce that, and potentially we're looking to upgrade the nickel concentrate to a battery metal product. So we very quickly want to understand the costs involved in going to a nickel sulfate, which will suit the battery end users. So we think we can remove that tariff by upgrading to a battery product. But yeah, the low cost environment for underground mining, processing costs, hydropower, these are some of the lowest cost mining you'll find anywhere in the world. So if we can deal with the tariff, and then I think we'll have some very low operating costs.
You touched on offtake partners and partners in general. When you acquire a project such as this, you do have an eye to those groups. How do you think they will react to you acquiring the option to this project?
Yeah, it's interesting. We've been in Korea over 6 months now. We've spent a lot of time with the battery end users in South Korea, particularly focused on cobalt initially, and they've actually driving us towards this nickel sort of, because of the nickel manganese cobalt ratios. So they're increasing nickel, reducing cobalt. So we think that the Koreans will really, I suppose, warm to this asset. LG have just announced an MOU with VinFast, and so they'll be producing batteries in Vietnam at down in Hai Phong, which is about 350 kilometres from the mine site. So the Koreans are in country building batteries. We think they'll be very appreciative of the fact that we've got the keys to the Ferrari.
Fantastic foundation of assets already in place. This is really the cream on the cake. Scott, thanks for your time. Exciting times ahead.
Thank you.